All right. Well, thank you so much for joining me for this quick mortgage update, Kat. It's awesome to see you.
Nice to see you. Thanks for having me.
For sure, for sure, for sure. So, yeah, I've been getting a lot of questions lately from prospective buyers and from homeowners about what's going on in the mortgage scene and what's going on in the market. Would you care to just kind of give a real quick overview?
Yeah, it's been a little crazy the last few weeks with COVID, right? So it's kind of rocked our world a little bit as far as regulations changing, different programs being put on hold, what's going on, servicers being a little frightened of everyone getting furloughed and not paying their mortgages, right? Because they still have the portion of your mortgage payment that they have to pay on your behalf. So they're still paying taxes, they're still paying your homeowner's insurance policies, but they're not getting your monthly payment in to cover those. So there's become a liquidity issue. So what that means is that servicers and lenders, when they're thinking about regulations and lending to people, they're being a little tighter on their restrictions
Hmm.
because they're worried about payments not coming in. So the future loans that they do, they want to make sure that the people they give those to are going to be able to pay them. So where we've seen the biggest impact on our regulations is our 100% financing program options for like first-time home buyers, and government loans has been a big one. So
Okay.
I'm speaking from Academy. That's kind of the regulations that I know. So different lenders have their different overlays.
Hmm.
And I know ours, but not everyone is even doing government loans anymore because
Oh,
they're
wow.
a product. So if you have someone that's pre-approved or you yourself are pre-approved and you're in a government product, and what I mean by that is like an FHA loan, a VA loan, veterans loan, or a USDA loan, your lender may not be offering that anymore. We are, thankfully, but we have seen some of the policies for those programs increase a little bit. So Academy requires us now, as of today, April 10th, to have a minimum of a 660 credit score, right? And that's
Mhm.
2 weeks ago, you had to have a 580 to get in an FHA loan. So that's where we're seeing a huge influx in regulations because they want to make sure that the people they put loans into are going to be able to pay them.
Yeah, yeah. A 60-point increase on a credit score is kind of a big jump in a week for the requirements.
Yeah, that's a huge jump. I think though everyone is kind of like, oh my gosh, what's going on? And we just need to get through COVID and they're going to be back. Our first time homebuyer programs are going to be back. The 101% financing is going to be back. Their requirements will ease up as far as credit score requirements and reserves and things like that. It's just, we're in a little bit of a pandemic. And
Hmm.
if you were thinking about lending someone hundreds of thousands of dollars, you'd probably start tightening up your regulations of who you're going to give it to too, right? Because
Yeah,
you got to worry about what else is going to be coming in or not coming in this case. So,
for sure. Yeah, so I had an interesting call on one of my listings yesterday asking about basically house hacking and some other investment types of questions.
yeah.
So, are some of those loan requirements the same as what they were before about keeping primary residences for a year and things like that to kind of lock in those lower rates?
Yep. So we've seen those are kind of pretty much the same, right? Those regulations, it's more what we've seen the biggest kind of rumble in our feathers is the government loan products. So primary residence, the rates associated with getting a primary versus an investment property, things like that are still very similar. You need to be in the house X amount of time for it to be considered your primary residence. And that goes back to a risk factor again as a lender.
Hmm.
If you're lending to someone and they're buying it as their primary residence, or if you're lending to someone and they're buying it as like an investment property or a vacation home, if they were to run into financial trouble, right, and they weren't able to pay their bills, which bill do you think they're going to stop paying first? The home they live in or the home that they just rent out for fun or as an investment property, right? They're going to
Right.
not pay on the investment property. So that's why the higher interest rate is associated with an investment property because it's a higher risk for a lender to lend to.
For sure, for sure. So if somebody does have a home right now, I know that we had just a blitz on refinancing lately. Is that still happening or has that slowed down for you?
Yeah, it's still happening, thankfully. We are still taking applications for like anyone over a 4% interest rate, call us. Like it makes total sense. We did see an initial hike and rates were doing these huge swings a couple weeks ago that it was really hard to manage and track and we weren't following the 10-year treasury and it was like,
Hmm.
what is going on? in the last week, things have settled down. The market has settled down. Rates have been really steady. We haven't seen any huge swings. And it's making a ton of sense for people to refinance because it's not only just about interest rates. It's like you can think of a refinance from a holistic approach of decreasing your total output. So you could technically still do like a cash out refinance where you essentially take some of the equity that you've accrued. And you may even have technically a higher interest rate doing that, right? To do a cash out,
Hmm.
but paying off some of your consumer debt. So your total monthly output, including your home policy and then your other liabilities, your other debts, is actually less on a monthly basis. So there's that option too of just making sure, like maybe it's not to lower your rate. There's other strategies, and when you're doing a refinance, and it's for a lot of people right now when they're thinking about debts and monthly bills and what's going on and not sure of job status, lowering payments as much as you can. We've seen it, people cutting Netflix accounts or gym memberships, things like that. It's also to look at, okay, well, maybe it's time to refinance and cut some of our other liabilities out too that we haven't even thought of.
Right. And that monthly payment, how much you actually have to pay out according to your income every month is something that you guys look at for home buyers and refinancers.
Yep, absolutely. We look at, it's called a debt to income ratio. So anytime if we take your monthly income and we take it over your total liabilities. So think of like car payments, credit card payments, student loans, installment loans, and your new proposed mortgage.
Right.
Yeah.
That's awesome. Yeah, and I'm not a financial advisor or anything like that, but like figuring out a monthly budget, I feel is a good place to start for everybody.
Yeah.
If somebody felt that with that they were qualified and they thought that perhaps they could find a good deal on a house, how would they get started with getting a loan with you guys, or at least preparing to have that conversation?
Yep. So my biggest advice, and this is pre-COVID, during COVID, post-COVID, is to get pre-approved before you're even ready to start shopping for a house. And the reason I say that is because getting pre-approved doesn't mean that you're making an offer today or even tomorrow or not necessarily even in 6 months, right? But what it does is it allows us to tell you, okay, hypothetically speaking, this is what you would be pre-approved at. So this is like, if you're comfortable with this monthly mortgage payment, these are the houses in this price point that you can look at. So it lets you start planning. It also lets us figure out if there's any blemishes like on credit report, or even you may have great credit, but we can get you even better credit and give you a plan, whether it's like a month or 6 months, to say, okay, pay down these credit cards and your score will increase to this.
Hmm.
And then you can also plan, and you can start like, say you pay $800 a month in rent right now and your mortgage payment is going to be 12. You can start pretending like you have a $1,200 monthly mortgage payment and seeing how that feels. You know what I mean? You're not stuck in anything at that point. You're just getting to kind of practice and say, are we actually comfortable with this? Is it impacting our life? Are we going to be house poor? Like, what really is comfortable for us? So it just lets you figure it out and create a plan. And just because you're pre-approved doesn't mean you make offers. It just means if you wanted to, you could.
I love that, and I love the fact of kind of a no risk trial run with your
Yeah.
budget. That is such a fantastic idea. So I know that you have helped some of my clients in the past and delivered excellent service. How can people find you if they want to reach out and get these first steps started?
Yeah, so it's super simple. We're online and we also have a mobile mortgage app. So if you go to catjergerlending.com, you can also just find me on the Academy Mortgage website. It's Cat with a C, and then I can also text you. So you can get your application done on your phone in less than 10 minutes. It's so quick and easy. I think people get super intimidated by the pre-approval process, and it's all digital now. You don't have to meet with me. You could technically not talk to me on the phone if you didn't want to, the whole process. It's all been streamlined and it's super quick.
Yeah, and from my experience with you two, your communication is excellent, whether it be via snail mail, text, phone calls, video Zoom calls, like you do everything. So that's awesome. Yeah. Yeah. And one other thing too is I always recommend my clients get pre-approved. It just really does start putting some real numbers to a blueprint so
yeah.
that if it's not ready right now, we can get on a plan. And now when people are having all this time, it's a lot of fun to kind of just like plan for the future and start dreaming big.
Yeah, I think it's like you said it perfectly. Like it's like a blueprint. We call it a path to homeownership. And you need a pre-approval if you even want to make offers. We're still
Hmm.
seeing multiple offer situations even during a pandemic, which is pretty crazy. So when people are nervous about our market crashing, it's like Portland is still such a hot place to live that even when we have a stay-at-home in place,
Hmm.
they're still getting multiple offers on their listings. So
Yeah, absolutely. And the MLS report just came out 2 days ago, and our inventory is pretty low here, April 2020. So
yeah,
yeah, it's still technically a seller's market. So yeah, full pre-approval really does make that offer stand out a little better.
exactly.
Absolutely.
Awesome.
Cool. Well, thank you so much for your time, Kat. Like, it's always a pleasure to work with you, and I hope to do a little more of these mortgage updates in the future with you.
Yes, please. I would love
All
it.
right, cheers.
Okay,
This is
bye.
Nicholas Stevens, Keller Williams, Portland Central, signing off with Cat Jerger, Academy Mortgage.